It's the headline-grabbing marriage everyone's talking about. Public-listed shell company seeking union with private business to raise capital without a traditional initial public offering. It's known as a Special Purpose Acquisition Company, or SPAC, and in Singapore-based ride-sharing app Grab, U.S. SPAC Altimeter Growth Capital has found its match.
This is approaching, Liling, $40 billion US in value. I mean, so it's by a degree of magnitude, almost 10x the next largest transaction alongside of it. It's just very, very significant.
It's the largest SPAC merger on record, topping a market that reached a fever pitch during the COVID-19 pandemic. New York City, home to the New York Stock Exchange and NASDAQ, where Grab is slated to list. It's a big draw for companies looking to access the deepest pool of capital in the world, and SPAC mergers can get them there faster and without the need to jump through hoops with an IPO. Media reports put the amount raised by U.S. SPACs in the first quarter of the year at nearly $88 billion US, surpassing the $83.5 billion for all of 2020. But things were starting to cool off in recent weeks, partly attributed to increasing scrutiny from the Securities and Exchange Commission.
I think there'll be more of a shakeout coming because a lot of the SPACs that went public with all this money are not going to be able to find companies to buy, number one, and those that do are going to find that the companies they bought were not nearly what they were cracked up to be or what they promised they would be, and so those stocks will trade down and already are trading down.
But the merger between Grab and Altimeter has given the SPAC market more credibility.
You know, this is one of the best and brightest, the largest unicorns globally. They could have done whatever they wanted, a prototypical IPO, a direct listing without even involving underwriters, just bringing their shares to the market. Or they could go this direction, and they decided to go here. So I think that's really important for SPACs as an industry, SPACs as an asset class, SPACs as a market product.
Even if the euphoria sort of comes out of that market, there's no question that SPACs have become a legitimate way for private companies to go public.
And a legitimate alternative to traditional IPOs and direct listings. Liling Tan, CGTN, New York.